Hello, welcome to session 4 of Auditing 304, Fundamental Principles of Auditing. A distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the best interest of the public. To do this, there is a need for auditor to completely adhere to the fundamental principles of auditing. They define the rules of professional conduct of an auditor. This session will introduce students to the fundamental principles of auditing, the threats to independence, and the safeguards for handling such threats. At the end of the session, we're expecting students to be able to explain the 10 fundamental principles, align and explain the fundamental principles of auditing, identify and classify threats to the independence of auditors, discuss the safeguards for handling the threats to auditors' independence. Chapter 2 and 3 of Auditing and Assurance Services in Ghana is the recommended chapters for this session. Don't forget to consult other books on auditing assurance to read more about this. Professional ethics and codes of conduct. What is ethics? We're saying that ethics refers to a system or code of conduct based on moral duties and obligations that indicates how an individual should behave. Professionalism, on the other hand, refers to the conduct, aims, or qualities that characterizes or mark a profession or professional person. So the auditor is expected to be professional and ethical. So now let's turn our attention to the fundamental principles that guides the auditor or that help the auditor in going about his work effectively. Within the Code of Ethics and Fundamental Principles, which all members are obliged to follow. That is, all auditors are expected to follow. The first one we want to discuss is integrity, the fundamental principle of integrity. Auditors should be straightforward and honest in all professional, business, and personal relationships. It is not merely honesty, but fair dealing and truthfulness. That is the auditor in every aspect of his or her life. Public or private must be seen to be honest. The auditor in the second must be objective. That is objectivity. Auditors should not allow bias, prejudice, conflict of interest, or undue influence of others to override their professional or business judgment. It is a state of mind which takes cognizance of all consideration relevant to the task in hand. It is referred to as intellectual honesty. So this is the second one. The third one is independence. We are expecting the auditor to be independent. Independence is looked at in two aspects: independence in mind, independence in appearance. In every aspect, we are expecting this auditor to be separate, not with any conflict issues. That is objectivity beyond question. Auditors are also expected to be professional in terms of their duties, that is, professional competence and due care. Auditors have a continued duty to maintain professional knowledge and skill at levels required to ensure that a client or employer receive competent professional services based on current development in practice, legislation, and techniques. Professional competence is seen in two aspects. That is the attainment of the professional competence and maintenance of professional competence. Auditors are also encouraged to be courteous and considerate. That is, auditors must behave with courtesy and consideration towards all with whom they come into contact during the course of performing their work. That is, auditors must be respectful, courteous, and considerate. Credibility. The auditor must be credible. Ensure that the information they provide is credible, can be relied upon at any instant. The auditor is again seen and expected to be confidential. But we're seeing that at some point in time, this confidentiality can be overlooked. But it needs to follow certain criteria before the confidentiality principle of an auditor can be looked. One, when disclosure is permitted by law and is authorized by the client or employer. In that circumstance, the auditor can breach his confidentiality principle. 2, when disclosure is required by law, for example, production of documents or provision of evidence in the course of legal proceedings, that also requires the auditor to overlook the principle of confidentiality. There is also the case where it's the professional duty or right to disclose when not prohibited by law to comply with the quality review of recognized supervisory bodies. For example, ICA calls an audit firm to look at its activities. There, it is expected of the audit firm to open up to the recognized supervisory body. If it is in the public interest, for example, if the disclosure is needed for the interest of the public to safeguard the public, then the fundamental principle of confidentiality can be overlooked. If it is related to terrorism and money laundering, these are illegal issues, and therefore the auditor can overlook the confidentiality principle and come out with the necessary information. Auditors are also expected to be, in technical sense, to be highly technical and standards in what they are doing. That is, auditors should carry out their work in accordance with relevant technical, legislative, and professional standards promulgated by regulators, recognized supervisory bodies, and other international bodies. They are also expected to be professionals in their behavior in every instance. For example, they are not supposed to make exaggerated claims for the services they are able to offer. They are not supposed to also make disparaging references or unsubstantiated comparisons to the work of others. So these principles guide the work and help auditors to stay in line and to be professional. Notwithstanding, there are certain threats to these fundamental principles. So we will look at these threats in a jiffy. The first one is self-interest. Self-interest threats which may occur as a result of the financial or other interests of a professional accountant or of an immediate or close family member. So the entity the auditor is going to audit, they have a financial interest in it, or a close family member have a financial interest in it. And this is what we call the self-interest threat. We have the second one, the self-review threat. These are threats which may occur when a previous judgment needs to be re-evaluated by the professional accountant responsible for that judgment. So you cannot prepare a financial statement as an auditor and audit it yourself. This, you are reviewing your own work, which we term as what? Self-review threat. Advocacy. And these are threats which may occur when a professional accountant promotes a position or opinion of a client to the point that subsequent objectivity may be compromised. Being an advocate for somebody, and at the end, you are supposed to audit that same person, will be tough and difficult, and therefore, your independence, your objectivity may be compromised. So we're saying that this is a threat to independence. Familiarity. Auditors are not expected to be too familiar with their clients because the close relationship of a professional accountant becomes too sympathetic to the interests of others, which will affect the quality of work, the professionalism, and objectivity of the auditor. Intimidation threat. Threats which may occur when a professional accountant may be deterred from acting objectively by threats, actual or perceived. For example, that client of yours, the fee constitutes about 50% of your gross fee. When they threat you that they will sack you, you shake, and therefore you may go in to what they want. There are several other threats: undue dependence on the other client, family and other personal relationship, and so many loans, hospitality in goods and services, and so on and so forth. So I will encourage you to read more about threats and how to safeguard them. Now let's turn attention to safeguards to threats. These threats exist. So what do the auditors do? What mechanism would they put in place to safeguard themselves from these threats? So safeguards that may eliminate or reduce threat to independence to an acceptable level fall into two broad categories. Safeguards created by the professional bodies, legislation or regulations, and safeguards created in the work environment. As several examples of safeguards that the auditor can use under Safeguard created by the profession, legislation and regulation. We have education, training, experience, requirement for entry into the profession, continual professional development, corporate governance issue, professional standard. That is the auditors availing themselves for training, advancement, and all the time getting to know current issues will put them at the position to safeguard themselves from several threats. This is the safeguard by the profession, legislation, and other practitioners. Also, we have safeguard from the environment, which are also so many. That is good recruitment policies adopted by the firm, disciplinary policies, strong ethical leadership, promote quality control. So, examples of safeguard in a working environment, that is involving an additional professional accountant to review the work done or otherwise advise as necessary. Consulting an independent third party when they need be. Discussing ethical issues with those charged with governance. Disclosing to those charged with governance of the client the nature of service provided and extent of fees. Rotating senior assurance, team personnel, involving another firm to perform or reperform part of the engagement, and so many and so forth. The point is that the auditor must make sure that they've done a good job. And to do this, you have to put in place certain mechanisms within your work environment to ensure you have safeguarded yourself from any threat that will bring about a bad or poor quality of audit by your firm. There are several of these examples, and I encourage you, read more from these slides, from the recommended text, and any other books on auditing. So this brings us to the end of session 4. Have a wonderful day.